Hey, good morning. This is Mayor Valensky with Driving Markets in the studio, not in the car. So that's it. It's called Driving Standing Markets. Anyhow, anything said in this piece is an opinion only, not investment advice or financial advice. Just going to give you a little bit of broad knowledge, what's happening in financial markets, and a bit of a wrap. Let's see what's going on. Let's see what was driving markets yesterday, and let's see what will be driving markets going forward. I hope you can hear me, and I hope the volume is good. Okay, so yesterday, a couple of things happened. Number one, Sam Bankman-Fried, for those who are involved in crypto or Bitcoin, I know a lot of you are not involved in that, and really it's a bit of a gamble, crypto. It's a bit of an up and down or binary. Is it going up or is it going down? There's no real fundamentals to it. So as far as market analysis, it's quite difficult to analyze because it's very much a demand and a supply, which is fine. That's party to all applicable to all assets. But there's no real financial substance to it or economics they can pile into the crypto sector. But let's just give a bit of a wrap on what happened there to give those traders a flavor of what's going on. So Sam Bankman-Fried was the ex-CEO of FTX, the number 2 biggest crypto exchange in the world that went bankrupt on November the 11th. So he was arraigned in Bahamas for fraud, embezzlement, money laundering, all types of charges, etc., etc. And he was supposed to be extradited to the US, but that actually didn't happen. There was a legal issue. His lawyers fighting it, didn't quite understand it, etc., etc. And obviously he will be extradited to the US, and they've arranged a grand jury ready for that. So that's going to happen more likely than not in 2023. I feel a bit sorry for the guy because I actually don't know if it's really embezzlement or he's just a very, very poor 29-year-old manager who was a billionaire, didn't really know what he was doing and got in too deep. I mean, I'd like some comments on that because there's a little bit of sympathy I've got for the guy, and I'm not too sure if he should spend the next 10, 20, whatever, 30 years in prison. I really don't know. I'm sort of split between, has he been victimized? Is he just been very naive? I don't know. I need some comments on that one. Anyhow, moving on. Yesterday, the markets moved down. Okay, so there was a drop in the Dow, the Nasdaq, the S&P. Again, 4th day running. We're looking at the overall concern, which is recession. This recession fears, which effectively started brewing around about 2-3 weeks ago on the street. I've been talking about recession for quite a while. I've been saying that we are going to go into recession in 2023. Effectively, we already are in recession, even though the official numbers don't reflect that. We are in a recession because you're feeling it in your pocket. You're feeling the cost of energy and food and the general cost of living and clothes and travel and gas and energy. We are feeling the recession as such, but official numbers, which is the government measures of recession, are being manipulated, in my opinion, a little bit, and they're not showing recession because they don't want to frighten the public. Okay, so the fears of recession is pushing financial markets down, and that's going to continue through 2023. What you're going to have in 2023 is a full-blown recession. Now, the question is it going to be a light recession or is it going to be a heavy recession? So in my opinion, it's going to be a very serious recession. It's going to be worse than 2008, 2009, which was a last major crisis. A lot of the traders today don't even remember 2008, 2009 because they were at school. It's only those people who are over the age of 30, 35 might actually remember that recession. But there's going to be a tough one. Traders who are younger will not know how to handle a bear market, and you expect the markets to fall next year by 25-30%, and property will follow on as a result of that. Properties always are lagging behind financial markets. Now, just going to dig in a bit deeper into financial markets. The whole high-tech sector was down yesterday. Again, all to do with borrowing costs. Remember, when borrowing costs rise, the high-tech sector tumbles because they're totally dependent on funding. So all of them fell. One of the biggest was Meta. Facebook fell 4%. Now, I'm not a big fan of Facebook, as you're well aware. I've been saying over and over again from the beginning of 2022, sell Facebook, sell Facebook. And it has come down around about 2/3, which is still not enough. Yesterday, it fell 4%. Now, Brad Gerstner, who's a big investor, hedge fund called Altimeter, now he's already very angry with Mark Zuckerberg that they're continuing to pour the money into a massive big black hole called the metaverse. Now, the metaverse is costing Facebook around about $9.4 to $10 billion a year in losses, just to create these metaverse laboratories that people can stick on these goggles and imagine that they're living in a metaverse. Now, this imagination is what's going to send Facebook down, maybe into bankruptcy. Okay, I'm actually stating that. Maybe Facebook could end up going bankrupt. Hard to believe at this stage, but if they continue in the metaverse ridiculous approach of trying to create this false environment by imagination, then I think they could end up going bankrupt. Now, in the immediate short term, we're talking Meta, which is the new name for Facebook, falling to around about $70 a share. Now, that is going to wipe off huge value of Meta, and also could impact on whether they have enough money liquidity-wise to keep on pumping money into the metaverse. So that's one to watch. So Brad Gerstner of the hedge fund Altimeter is not particularly happy with Facebook Meta. He's already written a very strong letter earlier in the year with his displeasure as to where they're investing the money, and is likely to get even more frustrated as those losses escalate. So Meta is on the way down. The other one to look at is Amazon. Amazon lost 2%. Amazon is going to continue going down all the way down to around about $75 a share. It already hit my target of $90 a share a little while ago, and it's going to go down a bit further because they've got supply issues and they've also got infrastructure issues. So there's a lot of things are going on there that will impact on Amazon, especially if we go into recession. You'll see the shares go down even further. Tesla's an interesting one. You could see Tesla go down to $130 a share. It starts getting to the border area where you could say, you know what, it starts to become an attractive buy. Because I'm a big fan of Elon Musk. And yesterday, as far as Elon Musk was concerned, what he said, he put out a poll on Twitter, should he step down as CEO, and 57.5% of the referees, the answers came back, yes, he should step down as CEO of Twitter. I'm not sure what the impact of that is. I mean, I think he's obviously still going to manage Twitter, etc. But yeah, I think that's an interesting point that came out. As regards in crypto's down again, obviously on the back of liquidity problems, and it's a high-risk asset. So you're going to have the crypto sector under pressure towards the end of the year and in 2023. Now, what I'm looking for is people, for subscribers and for comments. I'm going to pass this on and share it, build the base of where this message is going out there, impart the knowledge, and be empowered that you have enough knowledge, and hopefully take my experience that'll help you make money going forward. This is Mayor Walensky with Driving Markets. Have a good day.